Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the broader market. So lots going on today. We had the Fed coming out with essentially unlimited QE, looking to buy back treasuries and mortgage-backed securities. We had the Senate, and man, my job taking a turn for the worse where I have to listen to politics all day. Listening to the Senate hearing, they had a no vote go through. They're continuing to debate on what the bill is going to be for a stimulus. How much money is going to be sent out to Americans? Do corporations get a blank check where we don't know where money is going? We're waiting on that tonight. That's going to be a potential impact on futures trading tonight if we do get another vote. And if it does pass, if it passes, I believe it has to then go to the House. I would assume if something's going to pass the Senate, it's likely going to pass the House as well. But right now we have Democrats holding things up. I could care less about your personal opinions. Anything that you were just about to type into the comments, you can just say out loud out the window and it will have the same impact. So looking at SPY, we dropped to a lower low on the daily time frame, keeping the bears in control. And the most important factor for me is the hourly downtrend. The big bull spike this morning was big and fast, and it did not last. The most important thing for us is not what is the knee-jerk reaction of bulls jumping in and shorts having to cover it. It is, can we change trends? And the fact that we did not even change the 5-minute trend to favor the bulls after that move with a higher low and higher high tells you everything you need to know. There is no follow-through. Higher low, lower high, and a straight dump led down by the financial sector, which is the weight of the S&P 500, lead bears in the financial sector, while the tech sector holds on a bit better. Starting to see a distinct separation where some names are holding on really well and some names are dropping to lower lows. And just looking at the tech sector off the top of my head, just look at these daily charts and how different they are. So we've got Apple as a major tech sector name dropping to lower lows today. Yes, there's a lower wick, but it dropped to lower lows. We got Google, lower lows, lower wick, but lower lows. Microsoft, same scenario, lower lows. Compare that to Amazon. Amazon, lead tech bull, very strong. And we are currently 15% or so above our recent low, maybe 12%. Look at Netflix, way above our recent low. There is a night and day difference between what Apple, Microsoft, and Google did today and what Amazon and Netflix have done over the last few days. So we're seeing these names distinguish themselves. And as we look through these sectors, we'll see tech sector is clearly holding up way better than the financial sector. So we look at SPY, and the hourly downtrend during regular trading hours has been intact at this point for a very long time. We have no hourly higher low and higher high with any bounce follow through. We have no bull cross of the exponential moving averages, the 12 and the 26 period. The last time we had a little bull cross was our last daily bounce that just led to a lower high and lower low. So bears have complete control of the short-term time frames until we change the hourly trend. At the end of the day, the bulls held the low of the day, but of course we did not break resistance to change the trend. And we'll see if we get an after-hours reaction to the Senate vote. And we'll see how that impacts where we set up into tomorrow. If we see a bear break, again, because of the dividend distribution on SPY, I'm using SPX. If we break 2191 on SPX, I'm looking down at the next level on the weekly time frame at 2083. If we see another leg down, I will look to add to my long-term position. Again, my game plan is to scale in into weakness as long as we have not seen a weekly bounce yet. And my next orders are waiting just above 2,000 if we do end up dropping to that level. So hourly trend is our friend as far as a guide. IWM, the low of the pullback, 95.69, that level held. But for it to mean anything, the bulls have to break 108.76, which was the high of the week bounce attempt. That would be a hold of support, a break of short-term resistance, and a shift in the short-term momentum. QQQ. So we had the low of 166.80. That level did break, but not by much. Same thing though, if we're going to see any proof, we need an hourly trend change. The bulls would have to hold the low of the day and break 174.21 to change this hourly trend into tomorrow. But depending on where we set up overnight, we'll see how we set up tomorrow. And again, it doesn't mean as much to me if bull breaks occur and hourly trend changes occur in extended hours. There's way less dollar volume being traded. I want to see real dollar volume and significant follow through during regular trading hours if I'm going to believe trend changes and daily bounces taking place. The most important resistance level on QQQ for me is 183.49. XLF, very weak close. It's in free fall. This is the falling knife and the biggest impact today in the market weakness, in my opinion. 1731 is the next support, followed by 1586, and we're starting to get back down towards levels from the February dump in 2016. Bears have complete control. Hourly downtrend is our guide. XLV, the healthcare sector, is also in free fall. It's just as weak as the financial sector in the short term. The next level we're looking at here, there's more recent supports to go off of. After 73.54, I'm looking down at the next level of 73.16, 72.33. Hourly downtrend is our guide. Financial sector and healthcare sector must bounce and change hourly trends for any kind of market-wide bounce to follow through. Biotech sector is holding its low, and that's the difference between it and every sector that we just looked at. Its low was 62.94. Today we bounced off of 66.08. If we can break 73.60 from here, the top of the bounce, that's a daily trend change. So the hourly chart needs a higher low and higher high for us to say, okay, our daily higher low is now set. Can the bulls break 73.60 resistance to change the daily trend for the first time since this pullback started back at the end or mid-February, from our high in mid-February? Already looked. Who are we missing? SMH. So SMH is also holding its low. Bulls have to hold 97.04 and break 109.22 to change the short-term momentum and see bounce follow through. So QQQ and SMH slightly more bullish in the sectors and the biotechs, XBI, and XLV and XLF, the reason for the majority of the weakness today. TLT, very notable strong day, breaking 166.15 resistance. Have we changed the daily trend? No. This move is coming straight from 139 to 166. We must see a higher low and higher high for that follow through. If I zoom out, the weekly bounce is underway. Our weekly higher low is established, or our weekly support level is established, and now I would be watching for the potential of a lower high compared to 179.70. Hourly uptrend is our short-term guide. Anything above 160.46 is an hourly higher low. Notable break of correlation to gold today. Gold and SPY have been trading hand in hand for the last week, and that changed today in a very clear way. Perhaps it was the fact of unlimited QE that had some bulls jump back into gold. It certainly had a bullish reaction in Bitcoin initially as well. So we have the 4-hour uptrend easily intact. We're just going to look for a 4-hour higher low compared to 1485 when we top out. When we lose the 4-hour uptrend, we'll zoom out to the daily again and look for a daily higher low. The double bottom at 1451 and 1455 is the most important support level, and it's a base that the bulls are working off of, and a nice move with follow through. I may be interested in a re-entry of GLD. I exited half my position here and half of my position here, and I may be interested in a re-entry on a daily higher low. Once we top out, I don't care if we top out at 1560 or 1640, wherever it is, I will patiently wait and look for a daily higher low to perhaps scale back in to a bullish entry position in GLD, but I have not decided yet. All depends on how this bounce continues. Silver also continuing its bounce, 4-hour uptrend easily intact. Anything above 1228 is a 4-hour higher low. When we lose the 4-hour uptrend, our daily lower high has been set, and just like gold, we must change the daily trend for this bounce to have any follow through. The weekly bounce on silver, not as convincing on gold at this point. It's an inside bar, whereas gold is breaking its weekly inside bar. I take that back, not yet. Different setup. I'm thinking of a different chart. So silver's forming a weekly inside bar, as is gold. The difference is the high of last week, gold is much closer to that than silver is. Bull miners, very odd end of the day. At the end of the day here, we dumped. And it was a 25-minute dump from 23.29. We dropped 6%. And it was very odd because SPY was bouncing and gold was seeing very brief 5-minute consolidation. Neither SPY nor gold had anything to do with the magnitude of this dump. And if you look at NUGT, and again, this is why you got to be so cautious with these leveraged ETFs, but that is a 13% dump in 25 minutes. And if you do not have a stop loss on these plays, you will get crushed. So being very cautious here, but what I'm looking at on the bull miners is our tightening daily range, where we have our low of the dump, high of the bounce, higher low, and I would call anything under 25.50 a lower high. If we break the low of today, 21.12, our daily lower high is very quickly set, and we're looking right back at 19.29 support. So a tightening daily range and patiently waiting for that break sometime probably this week with 4 more trading days to go. Oil, very key 12-hour time frame. Low of the dump, high of the bounce, higher low, and we're approaching the midway point of this range right now. Anything under 28.46 is a 12-hour lower high. I would not be surprised to stay in this 12-hour tightening range until at least the inventory report, which is in 44 hours or something, less than that, 42 hours. We're looking for a 12-hour lower high. How this oil chart breaks is going to significantly impact the S&P 500 and the markets, in my opinion. If it drops bearish, it's going to give the bears more confidence in markets continuing to pull back. If it breaks bullish, it could be a short-term spark to get a couple-day bounce going in the broader markets. So we will be continuing to watch this tightening range over the next couple of days because how it breaks will be important, bigger picture. Natural gas trying to bounce, but anything under 170 is a 4-hour lower high. If this is our top, the bulls would then have to hold 152.4 and break 163.4 to try and change the 4-hour trend for any follow-through. That's where we stand in the broader market as a whole, patiently watching to see what the government is going to do, as brutal as that is, and watching the hourly trends as our short-term guides. Hope you had a good day. We'll check back in tomorrow. See you then.
Guess I'll give this company a shout out. So obviously no affiliation with them, but used this last year on my girlfriend's raised beds, and it's organic certified soil. And why I got it this time around is because most of my soil is very compact and dense as it has a base of manure. But this soil is a humus compost, and it's very light and airy, and her plants did extremely well in it, and it did really well with its water retention. So I'm going to mix this with some of my soil in beds that I'm preparing to lighten it up a little bit and get some more fluffy action. And that's better for stuff that needs to grow in the soil, like carrots or beets that need to have space to grow. Lots of flowers around the chicken coop. Not going to be using the chicken coop until next year. Today, or this year, going to just focus on plants only. But it's a pretty good little coop. Want to give the chickens more space and have to make the decision, do I want them to be free range, which is always the best, free range, but then some are going to die from the hawks, or do I want to try and protect them? Probably going to go free range. Pretty close to max bloomage on these trees. There's the greenhouse.